Hey guys, Jason from TheChartGuys here, putting together a special little video just for the Facebook group. What we're going to do is we're going to look at weed and CGC today and try and go through the 2-minute chart and 5-minute chart to talk about some of the plays that we went over in the chat room, why we did what we did, and what we were looking for. And I'm going to use a notepad to cover up the chart so we can look at the candles as they were developing and what was sort of going through my mind and some of the trades that I made. So I only made a handful of trades on this one today. I was in and out of meetings, but there was a lot of good opportunity here. So first, to start off, we're looking right now at CGC on the 5-minute time frame. So we all know what happened yesterday, absolutely crazy day. And then this morning in pre-market and after hours yesterday, we saw this continuation. First of all, we got a little bit of a dip and then just huge buying pressure really pushed CGC up into 33.41s. But by the time market opened, we had given a lot of that back. So it was quite a bit of back and forth, setting up some really early volatility. So that's what we're looking for right in the open. We know there's going to be a lot more trades hitting the market as soon as the bell opens. We've established a pretty broad range pre-market. We're not sure what's going to happen. So we need to see that first little bit of volatility to set a range for us to demarcate the beginning of the day. So for this part forward, I'm going to be just looking at the WEED 2-minute time frame, possibly the 5-minute time frame. And I'm only trading WEED because here I am in Canada, just focusing on that particular ticker, not looking at CGC very much at all. So first thing in the morning, what do we see on WEED? Of course, even though we're trading this, we're watching CGC, we're watching pre-market, we know what's happened, we know that that big range has been established, and we're waiting for a lot of volatility first thing in the morning. So we get our first candlestick, we see a big dip right in the morning. You see the bulls buying that dip right back up, pushing the price up, setting a very large range here. So it's small compared to pre-market, but it gives us a quick defined range from which we can start making decisions. Next candlestick, a little bit of weakness. So we've established a low, we've established what is probably going to be the high for the morning. And when we get this big range, ideally what we want to see is some sort of equilibrium. So for bulls to have any hope of continuing, or bears having any hope of continuing, we got to be able to break out of these ranges that we've set up for the morning. So we're looking for probably equilibrium in most of these types of cases. So we get our up, we get our top, we get another candle on the 2-minute time frame. We see some indecision, we see red candlestick, and then we get a drop. So right away, when we get that drop, we know that we've set this high. We want to see a lower low. So as we're coming down here, and as we're finishing this 2-minute candlestick, we're seeing a bullish reversal candlestick in the form of this 2-minute hammer. So we got this low established. It's a higher low versus the low earlier in the day, or low of the day. And we enter position, and I believe I entered somewhere around the mid-range, just under the body of this candlestick, when it looked like bulls were buying this dip. Now, a lot of this is just speculation, of course, that we're going to be in an equilibrium. So my stop is going to be breaking a new low, and then a stop below that would be the low of the day. So again, just speculation, hoping for equilibrium and expecting that pattern to play out, having faith that it's going to with this sort of volatility and the volume continuing from yesterday's action. So of course we got that a little bit. We see a bump up, and then we see a little bit of hesitation before continuation. So we see this nice little equilibrium pattern forming up, and what you would like to see is a continuation of that into an eventual break. So exit your positions, sort of eyeball where you think that nice little profit might be. Don't necessarily need to worry about holding to keep on moving because you have another entry opportunity when you're going to break that equilibrium, or another short opportunity when you break the equilibrium on the other side. So there's always opportunities inside equilibriums and on the break of equilibriums. So up, down. Now we are looking to set a lower high versus our previous high, and we see that set in. Now we're looking for another higher low to form. The candlestick comes down, not quite in the area that I would like to see. Looking at these two ranges, we would want to see something right around here. And of course, I've covered up my own price levels with this cool notepad, but I'm hoping that this works out. And a little hesitation, and then more bearish pressure. So again, we're looking for this range. We're looking for a little bit of consistency for an equilibrium, and we would expect to set another low. So expecting that pattern to play out, not being worried about anything except breaking this level to set a lower low you can enter anywhere in this range with the expectation of that continuation into equilibrium. So we see that, and we see that price comes up, but you know what? It just doesn't have the emphasis that we want to see. This shouldn't be our new lower high when we're setting up an equilibrium. We want to see the price come up to a range that's more consistent with the range of our previous highs and lower highs. So the fact that we were not able to push any more, the fact that we weren't able to push with any much more strength than we saw now was a red flag and a good sign to exit any small positions that you might have been in. Now, if you're entering this position and you got a good opportunity, as soon as you become profitable, you want to be setting your stops or be watching this to take profits. So I took a quick profit. I don't even know if I broke even on this particular trade, but when you get a sign of weakness in equilibrium and it's the opposite direction of the way you're going, you just want to get out, get cash, and you want to be in a better position to re-enter on a stronger equilibrium or break of equilibrium. So moving forward, we see we have a little upside, and this is where we see that weakness. So push up, hesitation, indecision, and then a breakdown. Now the real key is a break of this level, of course. So as soon as we break that lower low, our equilibrium has been negated, and we would expect to see more downside activity, and we can see some of that poking out the bottom here. So we move our candlesticks over, we are watching, and we're waiting for new opportunities, and we get quite a bit of continuation from that equilibrium break. So just to make sure everything is crystal clear, I'm going to go ahead and draw in these patterns. So the day opened, we hit our low. This is going to be our new low of the day. It's a key level. No matter what sort of pattern or trading you see established, this low of the day is significant. And then we get up here in our next couple of candlesticks, we set up the high of the day. Same thing, important level of resistance, and this range is important. So as soon as we set our high, if we're in equilibrium, we're going to be setting a lower low. We see that established here. Once we get a lower low, we're looking for a lower high. We get that, of course, with this new fancy yellow line. Come back down, set a lower high. Everything's in order for this equilibrium, and we get our higher low over here. Now, the red flag that I talked about, why is this a red flag? Look at the range between this high and this high. If both had a lot of strength or any hope of continuation, there should be more emphasis and more buying pressure that pushes the price up into this region. That's where we ideally would have seen our lower high. The inability to carry that continuation was a red flag, as well as how far the bears pushed down this low compared to that low. Ultimately, the only thing that matters, of course, is the break of this key level, setting a lower low, breaking the equilibrium, and boom, more downside. So that's a quick example of how I played the equilibrium pattern this morning and how I usually play them in general. Keep an eye out for these equilibriums. As soon as you start learning to watch for them, you're going to see them everywhere, and they're absolutely beautiful, and they play out so effectively. So keep an eye out for those lower highs, those higher lows. Watch for those tightening ranges. Keep your stops really, really tight, and you're going to have a good time trading these. So if this video is well received, I'll just keep on making these little tidbits for you guys. And I appreciate you being part of the Facebook group. Share it with your friends, whoever. Let's talk about some charts. And have a good afternoon, day, evening, whatever you got.